So you want to get yourself a mortgage, but you've been told your credit score is too low. Well, I've got 8 ways for you that you can help to improve your score. Let's go. Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker, and today I'm going to tell you how to fix your credit score. What is a credit score, I hear you ask? Well, it's a centrally held record of all of the payments you've ever made for anything. So we're talking personal loans, secured loans, mortgages if you've had one before, credit cards, some car insurance, gas and electric bills in there as well. Anything basically that involves a credit commitment and a monthly payment is usually going to be on your credit score. A couple of exceptions: council tax doesn't normally show on your credit score. So I've had people in the past where they've missed payments on their council tax. That doesn't show on your credit score, so that isn't going to affect you. But anything else that you've had monthly payments for in the past is all going to be held on your credit file. Now, it's also worth pointing out that there's a little bit of a difference between your credit score and your credit report. Your credit score is a number. It is a number out of, depends which provider we're going to. Experian, for example, it's a number out of 999. Equifax, it's lower, I think it's 500 maybe, but it's a number score, and the higher the number, the better your credit score. And that score is made up of all of the different elements of your report that we're going to go through in a second. Your credit report is the actual history. So that's the breakdown of all of the commitments that you've had in the past, what's been paid, what hasn't, what's been late, if anything, hopefully nothing. So that's your credit score versus your credit report. Now, as ever, before we get into the tips, if you find today's video useful and like what we're talking about, give us a thumbs up, subscribe to the channel because there's loads more content coming. We try and do a new video every week for you. So let's get straight into it then. Tip number 1 is voters roll, the electoral register. Make sure you're on the electoral register. So the electoral register is a database of everyone that is registered to vote. So on there we know your address. So the mortgage lenders, when they look at your credit file, they can see that you're registered at your address. It matches your bank statement. They know that you live there. So that can sometimes mean that we don't need extra proof of address for you. Now, it's really important when you're on the voters register to make sure that it's at the correct address. So, if you're registered to vote at your parents' house, but your bank statements are registered somewhere else where you rent maybe, that's gonna be tricky. So we need to make sure that everything is always registered at the same address. Now, number 2 probably sounds quite obvious, but it's don't miss any payments. Don't be late paying anything. This is the thing that has the most effect. Now, the more payments you miss and the longer it goes on, I talked in a video last week actually about what happens eventually when you do that and we end up with defaults and CCJs. We don't want to go down that road. If you've missed a few payments in the past, years ago, probably not going to have too much of an effect now if they were just missed or a little bit late. But if you've had missed or late payments in more recent months, that is going to have quite a big effect on your mortgage. You've had cases like that lately where we've had to go to some more specialist lenders just for some silly little mistakes in the last few months, and that's not ideal. So make sure everything is up to date. Make sure we've got direct debit set up. Don't miss those silly little payments. Now, number 3 is actually don't shy away from having credit. Having credit is a good thing for your score. If you don't have anything at all and you've never had anything, you've never borrowed any money from anyone, and you go to a mortgage lender and say, "Hey, I'd like to borrow £300,000, please," they're going to look at your history and think, "Oh, hang on, we don't know if this person's going to pay this money back." Whereas if you've had some loans and some credit cards and it's always been paid off on time and the monthly payments have always been made, then you've got a fairly good track record. And so the mortgage lender is going to look at you and think, right, yeah, you can manage your debt. You've had debt in the past, it's always been paid off on time, so yeah, it's a fairly safe bet that you're going to be able to pay our money back. So it can actually be quite hard for lenders to make a decision if you've never had anything at all in the past. So don't shy away from credit. I don't mean go and borrow loads of money that you don't need, but don't shy away from a little credit card or something like that. So that leads us on to number 4, which actually is take out a small credit card or a small loan maybe, but I normally say credit card because you can manage it a little bit better. So with a small credit card, it doesn't even matter who it's with. So if you've not got the best credit history, you're going to struggle maybe to get a credit card, you know, with your bank or one of the big providers. So it doesn't matter who this credit card is with. There are actually some providers out there that do a type of credit card specifically to help you build your credit score back up. So have a small credit card. Now, all we're going to spend on that each month is like a supermarket visit or a tank of fuel maybe, although that's a fortune nowadays, isn't it? But just a small amount each month. Really, really important though, that is repaid each month, or at least the minimum payment, and I need you to set up a direct debit for at least the minimum payment. So we make sure we don't fall foul of point number 2, which is missing any payments or being late paying. So we need a direct debit to pay at least the minimum payment on your credit card. Preferably, just pay it off. Just pay it off each month. You know, if you're putting £50 on it each month for a tank of petrol or whatever, then just pay it off each month. And that, slowly but surely, over a few months, will help show that you can get some credit and you can manage it well. So that is going to be a really good thing for helping quickly build up your credit score. Now, number 5 can sometimes be a tricky one to avoid, or maybe it could be too late. But number 5 is to make sure, or maybe be careful of, who you're financially linked to. So if you've got friends or partner that you've had financial link, so a financial link could be like a joint bank account or a loan or something like that. If they have not got very good credit, that can sometimes bring you down as well. So we don't want that. So just be careful, be mindful of who you are financially linked to. So, you know, if your brother's bankrupt and asks you to go on a joint account with him, then probably don't, ideally. So just be mindful of who you're going to be linked with when mortgage lenders have a look at your history. Now, number 6 is a really common one. We want to avoid having loads of searches done. So, search is any provider that has a look at your credit history, so mortgage lender, credit card company, loan, car insurance as well. This is a big one. I see a lot. Often when you go on Compare the Meerkat or whatever other websites are available, but when you go on those sorts of websites and you try and find the best car insurance deal, there's a box on there to tick, you know, do you want us to contact the providers? No should be the answer, because what that will do is each provider will do a credit search. And some of those are soft footprints, which we'll talk about in a minute, but some of those are hard prints, and that will leave a mark on your score. And what we don't want is loads and loads and loads of searches. Now, they don't last that long, so you know, if you did that a year ago, don't worry now. But if that's fairly recent, it can look like you've been shopping around and trying lots of different providers, and you know, perhaps they've said no, and that's why you're keeping going. So we don't want that. It just shows that they've done a search. It doesn't show whether it was good result, bad result, what it was for. It just shows that this provider has done a search. And so if you keep doing those over and over again, that can look not ideal for a new mortgage lender. So number 7 then, credit utilization. So this means how much of your credit, how much of your available credit are you using? So let's say you've got a credit card with an available limit of £1,000. So you can spend £1,000 on your credit card, and you currently owe £995 on it. You've got £5 limit left. That does not look good to a new lender. You're nearly using 100% of your available credit. Whereas if you've got that same credit card with a £1,000 limit and you're using £200 of it or £300 of it maybe, then that looks much better. It shows that, okay, you've got this allowance that you can have, but you don't need to use all of it. You're sensible with your money, you manage it well. We don't need to get anywhere near the limit on your credit card. So that's a really good thing, to try and keep as much available balance as possible on your credit commitments. So then number 8 is get a copy of your credit report. Now, if you're going to use someone like us, a mortgage broker, then it's really useful for us to have a copy of your credit report. So that shows us what is on there, what you've had in the past, if there's any missed payments, late payments, what your score is as well. Now, your score is less relevant necessarily to a mortgage lender. It's all about your conduct. So your score is a factor, but it's not the be all and the end all. So if your score is low, don't worry too much. We're mostly looking at the conduct of your accounts in the past and how well you've managed your money. So get that credit report. We'll ask you to send it to us, or just send it to us, or whoever you're going to use, whichever broker you're going to use, hopefully us, obviously. But send it to us, and we'll be able to see what your situation is and how we can help you and what the best way forward is. So I really hope you found that useful. That is a little bit about how to build up your credit score. If you would like some more bespoke advice about your exact situation, you can get in touch with us. There's a link below in the description to our website. You can also book an appointment straight in our diary in the description below, or through the website, whichever you prefer. So go and check us out on there, and hopefully we will help you get in that dream property really soon. Take care.